let's talk about one of the biggest fears in retirement planning. How do you get that income for life without feeling like you're gambling away your entire nest egg? Well, it turns out the answer might be something called a cash refund annuity. We're going to break it all down.
So, a steady paycheck in retirement, that's the dream, right? Annuities promise exactly that, but they also bring up this pretty common fear. You could call it the annuity gamble. You hand over this huge chunk of your savings for that lifetime income, but what if your lifetime isn't quite as long as you'd planned?
And that's the question, isn't it? It keeps a lot of people up at night. I mean, you've saved your whole life, you buy an annuity to make sure you're set, and then, boom, the unexpected happens. Does all that hard-earned money just poof, disappear?
Well, here's the tough truth for the most basic kind of annuity. It's called a life-only contract. And with that, the payments stop when you do. Anything left over, the insurance company keeps it. Now, some people are okay with that risk because it gets them the biggest possible monthly check. But for a lot of folks, yeah, that's a deal breaker.
But what if you could have both? What if you could get that income for life and have a safety net for your money? Well, this is where the refund feature comes into play. Think of it like buying principal protection for your annuity. Let's take a look at how it works. Okay, so a cash refund annuity gives you that steady income stream, but it comes with this really powerful guarantee. If you pass away before your payments have added up to what you initially paid in, the rest, the difference, gets paid out. In other words, your initial investment isn't just lost. And really, this boils down to three huge benefits that tackle our biggest retirement worries. First, you get that guaranteed income for life. That's peace of mind right there. Second, you get to secure a legacy. The money you saved can still go to your family. And third, it just provides this incredible financial security, smoothing out all those what-ifs of retirement.
So, once you decide you want that safety net, you've got another choice to make. How do your beneficiaries actually get that remaining money? You've got two main ways this can go. With a cash refund, your beneficiary gets the rest of the money all at once in a single lump sum. This is great if your heirs are good with money. The other option is an installment refund. This one just keeps your exact same monthly payments going to your beneficiary until that original premium is all paid out. This can be a fantastic choice if you're trying to protect, say, a minor or a dependent adult.
Of course, there's no free lunch, right? Especially in finance. Adding this kind of protection for your legacy, it does have an impact. And that brings us to the big trade-off you have to think about. The more guarantees you add for your heirs, the more it's going to affect your own personal income. This chart really shows it perfectly. A life-only annuity, the one with zero legacy protection, gives you the highest monthly payouts. But see what happens when you add that refund feature. Your payout is a bit lower. And that's because the insurance company is taking on more risk. It's kind of like buying insurance on your insurance policy. Now, you'll also notice there's a middle ground here, called period certain. And this is a super popular alternative. A life with period certain annuity still pays you for your entire life, but it also guarantees payments for a minimum number of years, let's say 10 or 20. So if you have a 10-year certain contract and you passed away in year 7, your beneficiary gets those last 3 years of payments. But if you live for 30 years, you get paid for all 30 years. It's just another clever way to hedge against that early death risk. Now, for anyone who is in good health and really wants to try and maximize both their income and a legacy, the source material points to another strategy that actually combines a couple of different financial tools.
Okay, here's how this play works. First, instead of getting a refund feature, you opt for a higher-paying annuity. Then, you take a slice of that bigger income and use it to pay for a separate life insurance policy. So what's the result? You get more cash flow while you're alive, and your heirs get a potentially larger and often tax-free death benefit. It's a bit more to manage for sure, but it can be a really efficient way to solve for both income and legacy.
So, we've gone over the problem, the different solutions, the trade-offs. Now let's wrap this all up with some real actionable tips to help you make the best call for your own life. And this quote from the source material really nails it. Every situation is different. Your retirement plan has to be built for you. What works for your friend or your neighbor, it might not be the best fit for you at all. Getting this personalized is how you avoid leaving money on the table.
So, what should you do? First off, always shop around. Get quotes from multiple companies because rates can be all over the place. Second, always ask to see the numbers for that period certain option so you can compare. Third, ask if waiting a year or two to start taking income could actually boost your payments. Fourth, be really careful with add-ons or riders. Only pay for what you absolutely need. And finally, if you're in good health, definitely get a quote for that annuity plus life insurance strategy we just talked about.
And that really brings us back to the core question. This isn't just about spreadsheets and numbers. It's deeply personal. Are you willing to take a little bit less each month for the absolute certainty of leaving something behind? Or is getting the biggest possible retirement paycheck your number one priority? Finding your own answer to that question is the real key to building the right plan. Thanks for joining me on this one.